Hello, hello, hello. Hey everybody, how's it going? Welcome to a capital hungry New York scalping session. Market analysis and scalping session. How is everybody doing this North American trading session? Hopefully everybody can hear me loud and clear. You guys can see the screen right now. It's just a black screen right now, gold in the background, news headlines streaming to the left, coming out every minute. Yeah, we're just going to be taking our time today, going through the usual process of the capital hungry live streams. I'm going to be keeping this as educational and as informative and valuable as possible. No trolling today. No roast today. Maybe a couple, but you know what I mean. Mainly just going to be information and so forth, all right? Yeah, hopefully you guys can't hear the storm in the background right now. Right now it's like a snow and rainstorm going on. Super annoying. It woke me up like a few hours ago, way early on, but I've been awake since. Okay, everybody, let's jump into it. Sounds like everybody is ready to go here. The audio is good, the visual is good. Let's get into it. So, first things first. Of course, during these live streams, we do fundamental and technical analysis. We break down trade ideas across various trading pairs, gold, GJ, GBP USD, Euro USD, USD CAD, US 30. We try our best to plan out and execute on highly effective winning trades. Sometimes we take the winning trades, sometimes we take controlled losses. But at the end of the day, we still have to understand that our individual trading success is dependent on our own responsibility and accountability, okay? So as a manual retail trader, you have to have an immense amount of focus on trading psychology. There's a ton of people who focus on technicals. There's a small fraction of people who focus on technicals and fundamentals. There's a rare group of individuals who focus on the risk management and psychology at a very in-depth scale. Never forget, the statistic exists that 90% of retail traders lose, they quit within their first 6 months, or they become addicted to the markets, okay? This isn't due to a lack of technical knowledge or a failing trading strategy, as you have to understand there's 1,000 ways to trade the market. Through this trading stream, I just like to share my perception of the market through what I've learned over the last 5 years using the various technical and fundamental concepts shared. But there's 1,000 ways you can effectively see if the market's going up or down and execute trades on it. Some people use indicators, some people use only technicals, some people use order flow and more of a fundamental analysis. Some people use whatever XYZ strategy across different trading styles. That's not the issue. The issue is the lack of focus on the risk management, the probability side of the game, the mathematics side of the game. Okay? So remember, as a manual retail trader, we will always have emotions come into play. And these emotions can sometimes be induced or influenced by factors outside of the market. For example, we could have some beautiful conditions in the market. Gold could be trending bullish, just giving an example. You could have fear tensions coming in with Russia and Ukraine. Everybody looks like it's so easy to buy gold, but you're going through a divorce or you just got fired from your job. Your personal emotional state right now of being more in a negative emotional mind state is going to negatively impact your decision-making process and your perception of the markets, right? I'm just giving an example. There's tons of things in our day-to-day life that can impact your psyche, impact your emotional state, make you angry, vengeful, depressed, sad, and so forth. So as a manual retail trader, you have to be self-aware, you have to be very critical, and you have to be able to analyze and stay emotionally neutral, okay? So, caution, Stay smart. Follow your trading plan. Follow your risk management plan. Focus on the long-term vision instead of short-term satisfactions. Keep emotions out, and this is the best way to avoid crashing your account. Okay? Now, some recent fundamental points. We can see that, of course, over the last month, the primary focus in the markets has been the Russia and Ukraine tensions. But the smart money market makers, whatever you want to call them, the whales, the one percenters, they always move the market positioning based on anticipation. Buy the rumor, sell the news. So a lot of the tensions regarding Russia and Ukraine so far have already been digested by the market and priced in. A lot of the fear, uncertainty, and doubt is starting to dissipate out. At the same time that we're starting to come towards the end of a month and end of a quarterly period. If you guys go and take the time to backtest yourself, when you notice that a lot of fundamental catalysts have been priced in and you don't have various events to bring high volume and volatility, especially towards the end of a quarter, you can really see the volume and volatility slow down. So as a manual retail trader, you have to stay adaptive to the volume and volatility. For example, in a few minutes when we look at gold, you're going to notice gold on the higher time frames is more just in a range now, slowing down compared to the very strong buyers moves we had when we had much higher volume and volatility that was induced when the Russia tensions were first coming into play, right? Now, as those Russia tensions have been priced in, a lot of the central bank decisions have been priced in. We can see the dollar individually ranging at highs. We can see gold also just ranging on the higher time frame, and overall having expectations of slower volume and volatility and corrective market phases to end Q1 as we're coming towards the end of the quarterly period. Okay? So this means that when we're looking at market sentiment, as we've had a lot of the fear, uncertainty, and doubt priced in, and we see that the stock market buyers are trying to squeeze out as much as they can out of the equity markets. So our safe haven currencies for the time being are either ranging when you're looking at the US dollar and softer, or very bearish like the Japanese yen, which helped us take some very nice GJ buys over the last couple of weeks, right? We can also see the same time markets are optimistic, we're seeing a lot of the demand come back into the equities markets. So that market optimism is keeping the yen flat, keeping the dollar ranging for the time being, and keeping a lot of the market demand in the global stock markets. Okay? Now, when we're doing a quick reading of market volume and volatility, when we look at the price action overnight over the last couple of sessions, we can see that GJ starting to pull back from new highs printed with a lot of the CPI data being priced in. We can see that dollar pairs are ranging and the US dollar is just ranging at highs. We can see gold consolidating on the higher time frames. The same time we're coming towards the end of a quarter and end of a monthly period. Through my perception of an experience with the market volume and volatility, it's looking relatively low to medium. We're not seeing high intense volume and volatility like if we have an interest rate decision coming in and that's a surprise, or like when we had the tensions active. You know what I mean? You guys can't hear me at all this whole time? I think the audio should be fine. I've been talking a lot, so hopefully you guys can hear me. I think the audio should be fine. My mic is going off here. Okay, cool. So my expectations is, yes, we're going to map out and do analysis and potentially look for scalps on gold, GJ, and other pairs. But we have to adapt ahead of time to the expectations of lower volume and volatility, okay? Last but not least, just a couple of news headlines we had over the last sessions. Just some relevant information. We still see headlines coming in with Russia and Ukraine, but nothing that's really having a large impact on the charts at the moment. But you can see overnight during the Asian session close, 5 a.m. Eastern, UK president says Russian forces are using Chernobyl exclusion zone to prepare new attacks. So trying to bring that threat of the nuclear escalation. Also overnight, we had the UK CPI data, which is still showing us an increase in global inflation. And we also had Kremlin repeating that military operation in Ukraine is going according to plan. Okay? So now, when we're doing our technical and fundamental analysis to map out some scalp trade ideas, we're going to take all that information we were just going over and now throw that onto the charts. Understanding we can potentially have low volume and volatility, understanding that we're having a lot of market ranging or pullbacks. We're coming towards the end of the month. We don't really have any economic events on the docket through the New York session either. So I want to show you guys something. When you look at gold here, right? This is on the 4-hour chart. We're just going to start with our gold analysis. You can see that obviously overall gold has been bullish, especially ever since we've been respecting this demand zone from the 1700s on the higher time frame. But the way gold behaves is the usual corrections that occur on gold are in correlation to the impulsive moves and what fundamentals are going on at that time. Meaning, whenever you see gold print significant highs, whether it's during periods of lower volume and volatility like this, or periods of higher volume and volatility like this, or like this, you can usually see that when you have these moves created, you have some pretty equal corrections. This being occurred where you have a fundamental catalyst come into the scene, where you have more buy orders flood the market from a favorable demand zone. You extend up to a new intraday high where the buyers make money on that change and increase in price. As the buyers take profit, sellers jump in hand to relieve them out of the market, and it creates this pullback phase, right? So that's number one. Number two is, what's more importantly, is a specific example like this. You can see here where you had the impulsive move and then corrective pullback phase, which was pretty equal in size and fashion. You come down to the same demand zone and fail to break still, right? But you can also see after having that large move, very strong volume and volatility, here towards the end of a month, start of a new month period in December, and coming towards the end of a year, you do have this consolidation period, right? So what I'm trying to explain to everybody is gold is still very bullish above the 1900s, 1880s. We're still respecting previous higher time frame demand zones. We're still overall bullish on the higher time frames as well, right? But the market moves in waves and has these various phases. You're not always going to have these impulsive move and continuous upside phases. Sometimes you have these phases which are more marked in yellow here, where you're still respecting the structure, but you're primarily consolidating, generating more liquidity and order flow before having enough volume to continue up higher. Does that make sense to everybody? So when we're breaking down market structure in that fashion, when we understand we're coming towards the end of a quarter, when we've already had this huge impulsive move and correction, which by the way, conveniently peaked previous all-time highs on the dot at 2075, you can also see previously here, after you peak those highs, you entered a consolidation and corrective phase for an extended period of time. When you're looking at the current market structure, the current market timing, a quick pop quiz in the chat. What market phase are we in? Yes, we're still trending bullish market structure, but are the buyers currently in play? Are we bearish Are we bullish or are we just consolidating in a corrective phase? Okay, everybody. So when we're looking at the current structure, how gold behaves, correct. We're in a corrective phase. We're ranging. We are consolidating. Roughly when you're looking at between these intraday highs and lows, from around 1910s to about 1940. So what does this mean for us as manual retail traders who might be scalping or day trading today? This means that we, the gold traders, have to stay adaptive to the current conditions. We don't really have any one-sided fundamental volatility. We don't really have any economic events to the table. A lot of the interest rate decisions have been priced in. Market volume and volatility is slowing down, right? So you can see that we're primarily just in this consolidation phase. You can mark out a rough resistance here or a support here, or you can just say this is your consolidation zone, this is your range. Over the last almost a period of a week, this is where we've been primarily bouncing between these highs and lows. Now, if we're doing some very simple deduction and analysis from a technical perspective, if we were to have technical intraday candle closure breaks below 1910, what would that show you between the buyers and... First of all, let me zoom out. Let me tell you something else first. When you see a technical consolidation or a range or a corrective phase, what does this tell you of the buyers and sellers' strength currently? To me, it shows me that we don't really have any significant difference in strength between buyers and sellers. We're just having this corrective phase. You're not having a large amount of buy orders in the market. You're not having a large amount of sell orders in the market. You're having the fundamentals relatively quiet. You're having this order generation phase, correct? So as scalpers, we most likely want to play this range accordingly. But for intraday traders and even for scalp trade ideas, if we were to have technical closes below this range, what does that show us about the buyers and sellers' strength, the order flow behind the scenes? If we kept failing to break the order block in range highs, then made our way back down and started to break below 1910, then it shows us there's a lot less buy orders and buyers are liquidating positions out of the market, and we are then breaking below, seeing more sell orders flooding the market, meaning analysis-wise, you can have a very simple trade idea to play sells below 1910, or a very simple trade idea to anticipate much more buyer volume in the market with breaks above 1940. Until then, you can't really say, oh, buyers or sellers are stronger in this range. We're just in a consolidation and corrective phase. That means for us as scalpers, we have to zoom in the lower time frames even more to map out some lower time frame trade ideas. And also remember, when gold or any other trading instrument or a market asset class you are trading, when it is in a potential corrective phase, consolidation phase, starting to just play between a higher time frame order block, as a scalper, you have to adapt to that, and your jabs at the market have to be even quicker as usual. For example, when gold is trending bullish, it's a lot easier to play the bullish momentum, of course, and hold trades. Whether it's holding a scalp a little bit longer for a few minutes, or whether it's holding a day trade longer when you're just playing the pullback buys or breakout buys. But when the market you're trading is in a consolidation phase, you don't have that same consistency or that same dependency on the current trending market. You have a lot of indecisive candles, huge wicks, cancellations of moves up and down. So what that means is you don't want to be fighting the market during these conditions. You either want to do one, sit on your hand and take no trades and protect your capital, or two, your scalps and jabs at the market have to be very quick. You map out your scalp trade ideas, you take your jabs at the market with your confirms, and you get the fuck out to live another day, right? So what that means is right now, gold is obviously currently in this range. We have some structure and higher time frame key levels to play here accordingly. What I do like here is the exhaustion overnight, an intraday candle still closing above 1920. This order block and price sensitivity where we collected a lot of orders here, and very nice bullish price action for the time being above 1929. I'm liking this bullish price action, and with how we are ranging, I would expect us, if we hold 1929, give or take deeper pullbacks, that we should be making our way back up to 1940. So these are the trade ideas I'd be looking for on the lower time frame right now. Right now you can see we're making a little bit of an order block, but even if we got another retest of 1929, breaks above 1931, I'd be looking for the buy scalps, which would give you roughly 30 to 40 pips to at least target these 1 minute highs again. Okay? Right now on the lower time frame as well, you can see with the failure to break these previous 1 minute lows, and then finally breaking above these rejection points after generating more buyer liquidity here, we had nice bullish moves with a 1 minute high printed, where if we hold above this price sensitivity area to the left, we have a lot of potential to at least revisit that 1 minute high price point, right? So with trade ideas here on gold, pullbacks to around 1929.28, failure to break below, break above 1932, break above 1935, but at least want to target these highs. I would only take gold sells if we broke back below key level 1923.5. Right now, gold is just in a higher time frame range. Volume and volatility is lower and slower. I'm not looking to really fight the market during these conditions. If we get those buy confirms, I will of course adapt accordingly to that. But other than that, that's what I'm looking for on gold right now for the time being. Keep in mind now, don't enter anything yet, because obviously we have New York Open in 5 more minutes. So don't take any trades yet. New York Open will probably give us a liquidity grab. What would be ideal is like gold just does a quick liquidity grab, pops back above, and we start taking the buy scalps to the upside. Okay? As we're waiting for New York Open, we're just going to continue our analysis and trade ideas on the other pairs. I just want to do a quick scan here where it looks like the US dollar is picking up some short-term strength again. But again, US dollar here, obviously in just a higher time frame range between these highs printed and these intraday lows. When you're looking at the US dollar higher time frame movement, you can see that it's very normal sorry, one second here. Okay, when you're looking at dollar index and how it trends as the world reserve currency and safe haven currency, you can see that we still have, every time that buyers print these intraday highs, if we fail to break those significant highs, we do enter some type of consolidation phase or some type of pullback phase from those highs. Right? Right now, after we had dollar buyers print these new highs, you can see that we've been in a consolidation zone. Because the US dollar is your world reserve currency and business currency, it's going to have a much larger impact in any of the correlated pairs that you may be trading. such as GBP USD, Euro USD, and USD CAD. So in the short term right now, just through the pre-New York hours and going into New York session open, you can see that we're having a short-term upside move on dollar, potentially going back to revisit these highs, as we're overall just in this higher time frame range. This means that we have that potential short-term strength on the dollar that we can play and have expectations of just some short-term weakness on pairs like GBP USD and Euro USD, and short-term strength on a pair like USD CAD. Okay, so I am still looking to play dollar in this ranging market, but just for our scalping session, seeing that it's bullish in the short term from London session and pre-New York hours so far. So I do want to play that correlation accordingly and take our time with that. But overall, even though GJ is doing a pullback from the highs, Japanese yen is still very bearish. Stock markets are still very bullish. I'll talk about GJ analysis in a second as well. Before we do the analysis on the other pairs, we already went through gold, but we don't have too much going on in terms of economic data. Just new home sales at 10 a.m. Eastern. Jerome Powell speaking at 8 a.m., but he's not saying anything about monetary policy. So for everybody who's talking about Jerome Powell's speech, most likely Jerome Powell's speech will not impact monetary policy. He's just talking about central bank governors in a digital world. He might be talking about central bank digital currencies and stuff. Okay? Yeah, Jerome Powell is doing a speech, but it's not about monetary policy, okay? And this is it right here, if you guys can read this. Okay? Christine Lagarde, same thing with ECB. They're just talking about central bank digital currencies. They're not going to be talking about rate hikes. It's not really, it's just about digital currencies, digital world. Central bankers don't like to talk about monetary policy. They try to stay away from it as much as possible so they can just keep making money behind the scenes. Yeah. So yeah, Jerome Powell, yes, he's talking at 8. You'll see the headlines to the left, but there's a high probability he's not talking about like monetary policy or interest rates or any of that. Okay? No Governor Bailey is talking today. This is March 23rd for any political speakers is just right here. You guys can see. I don't know if you guys can read it. It might be small on your screen, but I'll read it out for you. It's just Jerome Powell at 8 talking about digital currencies. Christine Lagarde at 9:15 talking about digital currencies. And then that's pretty much it. These are just some politicians and stuff like that talking about irrelevant stuff, you know? So, with our dollar pairs right now and dollar currently ranging, you can see that on a pair like GBP USD, we've just been playing this corrective structure from the lows. The same time dollar printed new highs, the same time the dollar index printed new highs and failed to break higher is the same time GBP USD in inverse fashion printed new lows and failed to break lower. You can see every time you have sellers have this impulsive move that drives price to new lower lows, you have this profit taking that occurs by the sellers as they liquidate positions, primarily seeing that profit taking on the dollar buyers, and pullback phases that occur. Right? So what we have been primarily playing is the short-term pullback phase on GBP USD from the lows. What we have to understand is that these pullback phases, they're not as impulsive or clean moves as you're playing with the trend. For example, you can see a lot of the sellers' moves, you have these very impulsive, very large, aggressive bearish candles. But the pullback phases are very messy in fashion. Messy in the sense of, yes, you have a pullback occurring to the upside, but you can have a consolidation occur, a lot of market waves, and so forth. Okay? Same thing from these lows now. The corrective phase in the market, whether it's a pullback, whether it's a consolidation, is always a lot slower and is always a lot messier in terms of the intraday and lower time frame price action compared to the impulsive moves with the overall higher time frame trend, which will just be in a day going down to new lows or previous lows. You know what I mean? So right now, when we're looking at GBP USD, if you were to identify what market wave or phase we are in, what would you say? Would you say we are in the higher time frame sell phase, where we've had the pullback completed and the sellers are back in play? Or would you say we are in a potential pullback phase from lows, a potential corrective phase? When you're looking at GBP USD right now, from the current price point we're bouncing from, and the current style of price action and market structure, what phase would you all say we are in on GU? Corrective pullback phase. I would also say that, right? So I just personally identify this corrective pullback phase based on the market structure, meaning you can still see as this corrective pullback phase is forming that you start to become a fractal of the structure, and you still have buyers printing these intraday highs, having these pullbacks within the pullback, while still respecting the corrective phase before the sellers really come back into the market. This corrective phase could easily still go up to like 1.335, 1.34 before we see the sellers come back into play. Does that make sense to everybody? Because look at some of these corrective phases previously here. First of all, look at a couple of things. How large they can potentially extend. And not just that, how long they last in terms of time frame. This corrective phase here was a couple of weeks. This one was almost a month. This one here was almost the entire month of October. This one here was 2 months at the end of the year, right? This one here, this corrective phase could last for another whole month. So as a manual retail trader or scalper, we have to adapt to these phases accordingly. Correct? Right now, we are in that corrective phase, meaning we want to adapt to those waves. So right now, when I'm looking at GU, what I can potentially see is with the current short-term dollar strength and how the corrective phase operates, where you have these very aggressive pullback waves within the corrective phase, it looks like if we stay below these previous highs, we could easily come back to 1.316 before continuing back up again and seeing something like this occur, right? So when I'm looking at GBP USD on New York Open right now, if this hourly candle and on the lower time frame can break below 1.32 flat here, I see a nice potential sell range throughout the day to at least retest 1.316. Does that make sense to everybody? Bang, 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 just the way the corrective phase behaves. Where if we hold below this area now, clear the wick, we can expect to see that fill and move there, especially with the dollar just holding some short-term strength for the time being. Does that make sense for everybody on GU? Now, I would be zooming more into the lower time frame and confirming now, coming back to the correlation. Okay, can dollar still hold some more strength throughout the day? And GU now, we need to have on the 1 minute time frame breaks below this 1 minute order block. As soon as you have the 1 minute breaks here, you're going to start to see an impulsive sell where you start to get your sell scalps. Then you'll possibly get a retest and continuation down as well. So whether you want to trade it on the 1 minute time frame or more on the intraday time frame, I'm looking to see if we can get breaks below these previous intraday price sensitivity areas here. And then having this continued repetition. Right? Very aggressive pullback waves that occur. Okay? So right now, no breaks yet. It'd be roughly around 1.32, 1.3195. But that's what I'm looking for on GBP USD. Euro USD now is going to be a similar situation as, again, when you're looking at Euro USD on the higher time frame here, and you're looking at how this pair trends on the higher time frame, what did we just have printed previously at the start of March? Sellers printed new significant lows, correct? Yes, overall, the market structure and price action is bearish on the higher time frames, but the market moves in waves. Okay, so as we're seeing the market move in waves and sellers printed these new impulsive lows, we have a high probability of entering a corrective phase. Remember, the corrective phase isn't always just a pullback. The corrective phase, yes, sometimes can be pullback structure that occurs like this or something like this. But the corrective phase can also be consolidation zones that can be created on the higher time frame there, right? Situations like this, and so forth. Here being more of a pullback, right? So same idea. You can see the correlation of our dollar pairs to the world reserve currency dollar index, and the same time dollar is at new intraday highs and consolidating, right? The same time he is at the dollar's at new intraday highs and consolidating, we can see GU's at those lows and Euro USD's at those lows in that consolidation phase as well. So when you're looking at Euro USD right now, we're in an even tighter range from 1.04 and 1.104 and 1.0985. Okay, so with our overall view and perception of the markets today, remember, don't forget, oops, didn't mean to click that, don't forget, volume and volatility expectations lower and slower. A lot of the fundamental fear tensions priced in. Market timing coming towards the end of the quarter, end of the monthly period. Not many economic events on the docket. We have a lot of ranging or corrective markets across the board. With Euro USD, we're going to keep it very simple. I'd look for sells from 1.0985, retest of 1.01 sells here, 101, breaks below key level sells, and I'd only be taking buys above 1.104. Okay? With USD CAD, US dollar against the Canadian dollar, we can see again, very common theme. Very strong consolidations, ranging, indecisive strength between buyers and sellers because of those reasons stated several times now. So we can't ignore that type of stuff. We can't try to fight the market during these types of phases. We have to adapt accordingly. If USD CAD fails to break these lows and comes back above 1.26, I'd be looking for buy scalps back up to at least 20-30 pips targeting these range highs. It would give a nice quick scalp, jabs in the market, take that and get out of the market. You know what I mean? We'll go back to gold in a second. Don't worry about that. Now GJ. GJ on the higher time frames, extremely bullish. Very, very beautiful bullish market structure. But what did I teach you guys about structure when we were analyzing gold at the start? That whenever you have large impulsive moves, when the volume and volatility starts to simmer down and the fundamental catalyst absorbed, you can have very equal corrections, right? Yes, you're trending overall bullish. Yes, you're having buyers print significant higher highs, respecting bullish market structure, but the pullbacks that occur are always usually in correlation to how large the upside move was, still respecting the overall bullish market structure, right? So it's not like GJ is bearish on the higher time frames, but it's completely normal that this pullback could even come now extend to 158.5, especially if we hold below 159.5. Okay? So I am anticipating GJ entering a short-term pullback structure just from what we're seeing overnight of the UK inflation data being priced in, high inflation being expected, new highs printed by buyers on the higher time frame, buyers liquidating positions from these highs, starting to enter a very normal correlated pullback phase. On the lower time frame when we zoom in, as long as we respect this bearish structure, I'm looking for 0.500 sells and also 159.2 sells, even retest that 159.8 sells to potentially come and drive us down to set up better risk versus reward buys to continue back up with the higher time frame trend. Does that make sense for everybody? Right? So yes, we've been playing GJ buys over like the last about a week and a half. But again, as manual retail traders, we have to adapt to the market waves accordingly. We have to keep in mind that GJ buyers finally broke above these higher time frame highs. We have to keep in mind new highs were printed at 161 flat. We have to keep in mind the market moves in waves and you have these correlated pullback phases. And we want to adapt to that potential pullback phase accordingly, especially as we're coming closer to the end of the month and the end of the quarter. We had some short-term buy plays overnight to the new highs, some quick bounces, but now we're obviously starting to see a pullback phase that could easily come back down to 158.5. On the lower time frame, we can see some nice corrective bearish market structure forming as well. That's Jay Powell giving us signals. Yo, you fucking retards. Stop. Jay Powell's talk about digital currencies. There's headlines right to your left. Most of you guys don't even know what Jay Powell does. Oh shit, man. Sorry. I said no roast. Sorry. I said no roasting. I said no roasting. Be nice today. Be nice to the idiots today. Fuck. So either we get a retest at 159.5 or breaks below 0.200 scalp sells. Okay. Jay Powell, guys, is talking about digital currencies. He's not talking about central banking policies. He's not talking about any of that stuff impacting markets right now. All right. That's right. You guys have, I'm giving you guys everything. What's going to come ahead of time, the news, the economic events. You have the news headlines right to your left here. Some of you guys are straight zombies, man. Straight mindless idiots. Like, have no clue. No, I'm not talking about you. I'm talking about there's people who've been talking about Jay Powell the whole time, not just you. Okay, so the gold buys from 1929, GJ sells from 0.500 retest or break below 0.2. GU here, we're gonna be looking to see. This isn't a good break right now, but we're gonna be looking to see if we still hold below the key level and can start taking some scalp sells shortly in this new 15-minute candle. Euro USD, if this hourly candle can flip bearish and come below the key level, we're looking for sells. UCAD breaks above 1.26, we're looking for buys. I think I covered everything for trade ideas right now, right? Oh shit, US 30. US 30, I'm expecting a little bit of a pullback, just a little bit of a decline by the buyers in the market. I'm still bullish here, but if we come below 34,600, I could still see deeper pullbacks to 34,300 before seeing further buys in the market. Okay? So, no, I think today my CH stream today is glitching out. Like, for some people it's saying waiting, for some people it's not loading the stream, for some people the audio is not working. It might be the storm going on in my city right now. But anyways, for the people that can hear me, it's all good. Okay, so gold, don't take any buy trades on gold yet. We're not showing a lot of buyers pressure here. The safer buys when we're looking at the 1 minute price action on gold right now would be taking buy scalps above 1931 and 32 with a 30 pip target of these 1 minute highs. All right. Okay. I apologize, everybody. I think due to the weather in my area right now, there's like a heavy rain and snowstorm going on. I think my internet might be trash as shit right now. My internet's dog shit. I'll tell you guys right now. Obviously, you guys know I can afford great internet, but I live in a very old area where I can only get dog shit internet. You know what I mean? So I think people are having issues trying to load my stream. It only says to me right now, it only says one person's watching the stream, but I see like at least 20 people in the chat. So, you know what I mean? I just kept talking anyways. Yeah, right now it shows me one person's watching the stream. Fuck my life. One guy. You know what I mean? Yeah, it showed me. Imagine just one guy sitting on his chair watching me. 463? That's not bad. If that's the real number. To me, it says 1. Yeah. Just one guy sitting in his chair giving me support. Yeah, so don't take any gold buys unless we have 1 minute breaks above 1932. Otherwise, if gold comes down to 1923, we might get a buy bounce from 23. All right? So don't rush any gold buys. We're just ranging, bouncing around at the key level right now. Okay, GBP USD. Did anybody take the retest sell scalp on GBP USD? So far, it's only about 10 pips. 13 pips. Once we hit 15, 20 pips on GU, look to secure partial positions or close the scalp. We were looking to play some of that short-term dollar strength. We were respecting our key level as a sell zone as well here. We called sells. But we were looking for the safer sells below the 1 minute lows here with the 1 minute break in retest for a quick 10 to 15 pips. Okay? GJ, we're waiting for the retest still. And gold, we're waiting for gold. This is why I told everybody don't rush the gold buys. It's doing deeper pullbacks right now on the higher time frame right here. So gold is still very messy and ranging, but based on the 1 minute price action, that's why we didn't want to rush the gold buys. And that's why we also explained ahead of time that with gold, we're going to be very selective with our trades, because we understand right now with the lower volume and volatility, we don't have the best conditions right there. Okay? Yeah, people always say they catch every trade. Like if gold pushed up right now, people would have said they caught it. If gold melted right now, you're going to have guys in the chat say they caught it. But how many of those guys are consistent traders? Probably only 1%. That's just, not to be mean, that's just the truth, right? You have to understand, a lot of the social media communities and even the YouTube communities, they're very hyena-ish, very vulture-like behavior, very impulsive, like no control, heart beating out of their chest, just looking at the chart, seeing what looks good, what doesn't look good, trying to just take quick trades and get money, trying to make a quick buck, flip their account. They've been trading and doing the same shit every single day, watching streamers or social media marketers every single day, rinsing and repeating the same shit. Never really having any growth with their account. They trade every day, but they never actually have any growth with their account. Always looking to take scraps out of the market. Sometimes they win, sometimes they go back to break even, but never any actual self-development with their knowledge, their psychology, their risk management. You know how many people where I just said that right now and they're fucking rage face right now? Like, Jeevan, you fucking asshole, fuck that. No, I made money last week. Who cares if I crash my account? Trust me. Trust me, man. It's the nature of the beast. Yeah, so obviously we were gonna look for gold buys above 32 as we had some nice lower time frame bullish structure overnight, but overall we're still just ranging, so we didn't get really anything clean to execute on with the confirms. No trade there. Now everybody start to look at Euro USD here as well. We can see with the short-term dollar strength, right? The rejections in buyers failing to break 1.04 key level, buyers liquidating positions, stronger sellers price action overnight, New York open grabbing liquidity first and making an upper wick, not much lower wick here. If we stay below 1.0985, we have a lot of potential to revisit these low points and play that short-term dollar strength. But we do have a new 30-minute candle in like 5 more minutes, so just watch out for that, okay? But in the next 30-minute candle, that's what I'm going to be personally looking at for GU, is just a little bit of a 30-minute making an upper wick, then us starting to drive down and target these lows, which for a scalper range is still a pretty good range here of almost 15-20 pips. Okay? Gold, I'm only taking gold sells if we break below 23.5, because I'm actually expecting that we could easily come here, bounce, and still come back above 19.29. Also, if this is just a deeper gold pullback and we were to drive price back to the upside, right? Then instead of waiting for 1932 buys, I would start to take buys above 1929. Because what that would show me is gold was just doing a deeper pullback to grab liquidity, collect more buy orders, and we should have enough volume above 1929 to at least revisit 32 and higher. Does that make sense to everybody? The reason why I didn't want to buy 29 here is because we were just consolidating. But if we snap back above 29 after this liquidity grab, that shows me we had this deeper move down to grab more buy orders. Then we have more buyer volume where we come above 29. Then we can jump back in buys earlier there from 29. You guys know how gold is when it's ranging. It could snap, it could do these huge wicks and snap right back above the level, no problem. But when it's ranging, we have to adapt accordingly. Okay? So if gold, even like in the next 30-minute, like if this is just a pullback from the overnight move and the next 30-minute starts to push back up, we can also 1929 start jumping back in buys again. I still have 400 viewers. Right now it shows me one viewer, one like, and the like is my own. Like when I liked my own stream. So yeah, pretty depressing. Yeah. Shows me one viewer still and one like, and it's my own like when I started the stream. Yeah. I'm only selling gold below 1923.5. Hey, oh, sometimes you gotta be your biggest fan, you know? Sometimes you gotta be your own biggest fan. Oh, here, over here shows 450. Oh yeah, by the way, everybody, I tried a new style of videos. And for those of you who like my rants and who like my educational webinars on psychology and economics, somebody did a visual documentary of one of my rants here. I just uploaded that yesterday. Power of the Dollar mini documentary. If you guys want to check that out. All right. Also, make sure you guys check out the Capital Hungry YouTube page where you can learn more than any course, any marketer. You have all these playlists, individual market analysis, trading webinars, self-development, live trading streams, 1-minute breakdowns, live market update webinars, right? You have hundreds and hundreds of videos here. But this one, if you guys want to check it out, I just uploaded yesterday. It's like a mini documentary. I'm trying a new video style. If you guys enjoy this style, I'll do it more often. All right? It's like a video style. It's like a video essay documentary style. If you guys enjoy that style, I'll do that a lot more often. I'm still going to be doing like 1-minute video breakdowns, YouTube shorts for the, you know, people have low attention span nowadays, fucking retards and shit. I'll still be doing lesson webinars and stuff as well. I do everything, man. Self-development, 1-minute breakdowns, news, lessons, technicals, fundamentals, self-development, freaking video documentaries, everything. Everything's here. Even how to lose your fat titties and build muscle like me. Everything. If you watch all the webinars on the Capital Hungry YouTube page, you'll probably just become a better man. To be honest with you, you'll probably just become a better, stronger, more confident, more educated, and knowledgeable man. Is honestly what will happen. You know what I mean? Also, remember, this is all free. Way more than any marketer, Daniel Savage, Q Banks. They'll never release information like this for free. You know why I can post all this for free and still have a paid private chat that people pay for? You know why? Because of all the knowledge in my brain. That's why. All the knowledge in my brain collected over the years, where I can still post all this. No clickbait, no marketing, no nonsense, no MLM, no Lambos. This Lambo is just to show you that that wanting to buy Lambos will destroy your life. If you want to become fat, then you will have man breasts. But if you have muscle, then you'll have what is called pectorals. So it seems like you're a little bit dumb there. Don't forget the Capital Hungry YouTube page. It's posted 35,000 news headlines. Forex Factory uses our Twitter page. Twitter page. Capital Hungry free Telegram analysis channel. I post the trades I take, withdrawals, live trades, wins, losses, analysis, charts, streams. You know what I mean? Make sure you guys check out all those resources, all right? Right at your fingertips. These are all the free resources. If you want more, then there's over 500 of us in the Capital Hungry private channel where you get access to this news terminal, and there's too much stuff actually. There's too much stuff for me to explain. All right. So everybody, new 30-minute candles. Let's zoom out from the lower time frame, see what's going on here. GU, hopefully you guys secured at 20 pips there. GU scalps called live. Let's talk about what we were taking here. NY volume used. Short-term Dixie strength. LTF bearish structure. Break below KL. Break below 1 minute lows. 15, 20 pip scalp. Alright. Now, new 30-minute. If we see gold here, 30 minutes start to come back above 29, then we're going to take some buys here. But so far, no. GJ, 10 pips so far. I'd be looking for this new 30-minute if it comes to 0.200 again. But I do want us to start driving down to 159 now and playing the 20 pip range PPL to PPL. We might come to 0.300 as well. But it does look like we want to just extend these sell trades now on GJ. Euro USD, we're just waiting for this new 30-minute candle. If it flips bearish, comes back below 1.298, sorry, 1.098, I'd be looking for the sells here on Euro USD. USD CAD, we're looking for buys above key level here, which is going to be looking like setting up shortly. Minor little lower wick for the new 30-minute. We should start to continue bullish here. Okay? Yeah, a lot of people want me to have a face cam on these live streams, but it's not like my face is hidden. Like, I have plenty of videos showing my face and body. A lot of you, honestly, a lot of you guys are gay, man. A lot of you guys are gay. A lot of you guys just want... I'm doing like, I'm not playing video games here, or like doing a reaction to some videos, or like fucking trying to show my like smile and eyes like, oh yeah. I'm doing analysis on financial markets. Talking about news, fundamentals, economic events, looking at like the charts. Why do you guys want to like have my face in the corner? Like, why do you guys just want to see a big square over here? My face. A lot of you guys are gay, man. You guys are gay. Nothing against being gay nowadays, you know what I mean? Not trying to get canceled and shit. But it's a little bit too gay for my liking. You know what I mean? Oh. I'm trying to do educational streams, economics. Look at my retard ass stuttering right now. Look at what my retard ass prepared for all of you. Look at me. I prepared mental reminders, animation. You know what I mean? Psychology and mental reminder animation. I prepared what fundamental points are in focus animation with like a little TV screen. You think this shit was easy to do? I gotta edit that shit every day. I gave you guys a nice little screen that comes from the top down. Plasma, LCD, market sentiment reading right there. Right? I gave you guys a new capital hungry market volume reader. Even telling you guys volume volatility pretty low right now. You know what I mean? Look at this shit. I gave you guys this cool ass fucking ripped newspaper with real news headlines about the markets there. Pinned to the screen. And you guys still just, oh, let me see your face. Let me see your face. You're gay. You're gay. Yeah, these are always saved and recorded, all right? Yeah, GJ so far, 15, 16 pips there for anybody who took the GJ sell scalp. Huh? Yeah. So far, 16 pips. Gold, we're still waiting. Yeah, headlines to the left. You guys can see the headlines to the left. We had not too much going on, man. Quiet day, guys. Quiet day. Quiet day today, guys. Guys and gals. GBP USD is running nice and clean. Euro USD is going to be setting up shortly as well. USD CAD's only up about 5 pips so far. So 5 pips looking like the breakout. We might still get a retest, but not bad. Okay, so okay, so we went through a full psychology breakdown, fundamental analysis, technical analysis, right? We marked out what trade ideas we're looking for and why. We had so far just this quick little 5 pip move on UCAD, but we're getting the pullback, so we'll be watching this accordingly, but very aggressive bearish candle, so we could easily get a deeper pullback before continuing up. Gold, we haven't had anything to execute on yet. GJ, we had a quick 15 pip scalp below 0.200, continued momentum. And GU, we had a 20 pip scalp. Now, let's go through a little question and answer period. If anybody wants to ask any questions about markets, charts, currencies, fundamentals, if you want to send me a TradingView chart, I'm just going to focus on the YouTube chat right now until the new 4-hour candle and just going to be answering questions. I'll try my best to answer the questions. If anybody asks any. Okay, take it easy, buddy. I said questions about the market, fundamentals, technicals, your charts. People said, are you single? What do I think about Luffy's awakening? I think that he's Joy Boy. Okay, let me check these questions now. All right, let me go through. Are you single? No, I'm not. What's the best pair to trade? Stupid question. How to get beta women? Why do you want beta women? How much one lot gold size in grams or kilograms? That's gotta be, honestly, I'm screenshotting that because that's some of the most retard shit I've ever read. How much is one lot gold size in real life kilograms? I gotta save this one. I gotta send that to my banter chat to make fun of that later. Look at these idiots. It's not, this is digital spot gold. You're not buying a gram of gold, my friend. This isn't, you're not. Okay. What else we got? Luffy's awakening. Yep. Let me keep reading the questions. I'm reading the questions. What will GJ reject to? GJ can possibly come down to 158.5 and still be bullish on the higher time frames. Triangle pattern on gold. I don't look at geometrical shape patterns on the market. I look at price. What is the target for GU sells? Our scalp target is hit, but I'd like to come down to 1.31600. Why do you run the range from candle bodies instead of wicks on lower time frame? That's a secret. Maybe you should backtest how much you react at candle bodies. In your opinion, why do most people fail in trading? Because most people are impulsive, they chase short-term satisfaction, they lack any sense of risk management, and they are influenced by social media and false expectations. Why do you have gay people in your chat? Because capital hungry is a diverse culture. When will CBDC be a thing? In a few years. Would UK budget have an impact on GJ? No. What is your daily routine before and after trading? I like to do some breathing exercises. I like to do a bit of stretching, drink some water, and I usually don't like to eat anything in the morning. Do you think about ICT stuff? No, I don't. I think about order flow. ICT, Wickoff, all these other people, they're just using their own terminology to explain the same shit about order flow. Wickoff has his names from the frickin' 1800s. ICT has his weird shit like breaker, order, bleaker, breaker shit. I just say order block, consolidation zone. Everybody's using different terminology to say the same things about movement of order flow. Once you start to realize the universal concepts, you'll start to realize that. Do you think someone can make it in trading off your free content with no mentorship? You can make it in trading without just your own studying, of course, but it's obviously going to take a lot of time and effort. If we have Feds do a 50 basis point rate hike and Russia tensions persist, would this impact and bring more fear sentiment? Yes, it would. Am I gay? No, I am not a gay. Because that is the time of Japanese yen movement individually. Yeah, remember, volume and volatility is low and slow, so we're just taking our quick jabs at the market and getting out. 10, 15, 20 pips, and we get out. Do you think we'll have another 25 basis point rate hike? I think we'll have another 50 basis point rate hike. What are some fundamentals that can impact the price of copper? The supply and demand of copper, the mining of copper. 33.24 fib and 4 EMA bounce with a double penetration RSI on gold. That's crazy. What's my take on cryptos? I don't give a shit about cryptos. Do I mostly scalp or swing? I don't scalp anymore. I just day trade. I only look to take a couple of trades a week, maybe a few trades in a month. Like, I'm not even trading this month anymore. If you guys remember the last trade I took, I made 60 grand in the one position when gold was trending bullish. So after that 60 grand, I was like, yeah, I don't really need to trade as much anymore. This on Raja's Dominion Brokers when we were bullish, I caught 200 pips on 15 lots. 200 pips a position when gold was still trending very bullish. So I personally don't scalp anymore. I do these scalping sessions because I'm really good at analysis and calling out scalps. But ever since I got busier with my business and life, I've been doing more day trading. Oi, ICT got deeper stuff. That's great. That's wonderful. Why are you watching my stream then? Interesting, right? It's cause clearly you're not fucking successful through whatever he's fucking showing you. But you're still watching me. A lot of you guys have to understand, even me, people are using different terminology to explain the same things. But a lot of you are very inexperienced. You don't really have any knowledge to understand that yourself. The universal concepts of the market and order flow, buyers and sellers transactions that move the market, the concepts behind profit and investing, right? That's all the same. The market movement's been the same for decades, for a century. All right? Obviously, technology innovates. You get more market participants and so forth. But like all these ICT students, they think they're some fucking Jesus or some gift from heaven, and they're all still trading the same penny lot accounts. They're still not having success themselves. None of them really show anything. So it's like, all right, maybe don't follow. Maybe you should realize and focus on what matters, is mainly the risk management and probabilities. All right. Technicals and fundamentals, there's 1,000 ways to trade the market. You could be a full indicator trader only. You could develop a system with just EMAs and fibs if you truly want to. Where what really matters in your victory of becoming a successful trader is your risk management and probabilities. First of all, do you have a positive risk versus reward? Second of all, do you focus on your risk management, emotional control, and taking trades based on pre-planned analysis? Right? Can you suggest any free alternative for news headlines? The Capital Hungry News Twitter, which has posted 30,000 news headlines. Yeah, I'm not saying his stuff is good. I'm not saying his stuff is bad. I'm just saying that you have to find what works for you in terms of your technical and fundamental system. What makes the market easy for you to understand. That's like whatever. But the main thing you have to focus on is your personal psychology, risk management, and focusing on a positive risk versus reward ratio. If you focus on a 1-to-2, 1-to-3 RR, you can have a 50% win rate and a 50% strike rate and still be profitable overall in your long-term run of trades, right? So if your trading system that you find helps you analyze price going up or down is based on EMAs, if you find that it's based on ICT, if you find that you like the way Raja explains it, if you find the way you like I explain it, that's perfectly fine. But that's not going to find you success. What's going to find you success is your focus on your personal emotional control, psychology, and risk management with that system you prefer. Does that make sense to everybody? Right? So I'm not here to say one system is better than the other. I'm not here to say Raja's technicals and fundamentals are better or worse than mine, or anybody else's is better or worse. I share my perception of the markets on how I do analysis, on how I observe order flow, on how I observe fundamentals, technicals, and psychology. The reason why I'm successful is my psychology, my risk management. The reason why Raja's successful is his psychology, his risk management. Okay? No, I trade my personal account, but I haven't taken any trades today. My account's not as big as like Raja and them, but it's still a 6-figure account. I just did a withdrawal recently last week, but I was at 300K and I just withdrew about 20K. But I have a couple of accounts. I still have the build account I'm doing as well, which that has 80K right now from 50K. Again. Right? But I trade my own personal accounts. But you have to understand, I've been trading now for 5 years. I went through my 2 years of trial and error. I went through 2 years of probably losing $50,000 total. You know what I mean? So yeah. So yeah, whoever style you want to follow or whatever system you want to follow, that's really besides the issue. Okay, so you can see Euro USD is just ranging. GBP USD, we had our 20 pips doing deeper pullbacks. GJ also doing deeper pullbacks on the lower time frame right now as well, as we're coming up to the new 4-hour candle setting up. Okay, so now let's be patient. because with the new 4-hour candle on GJ here in about 8 more minutes, I can easily see us come and retest 0.500 and see us have sells back down to these low points, playing the lower time frame bearish market structure and price action right now. I didn't lose 300K. What the hell are you talking about? My account is worth my account capital is 300K. Or you lost 3, or I don't know what you guys are talking about. Yeah, now it's best that we wait for the new 4-hour candle, just as usually the intraday candles have some stronger price setups. So I can see GU for the new 4-hour, GJ for the new 4-hour candle coming to 0.5 and giving some more sells again. And GU, I can see us coming back to 321 and getting the exact same sell scalp again. Yeah, for scalping, using limit and stop orders, either if you want to play the breakout style or the retest, is very useful. Don't forget, everybody, the Capital Hungry YouTube page right now. Let's actually go down it. 4 videos a row, right? Look at this. Look at this. There's no clickbait. It's all on personal self-development, psychology, risk management, technical analysis, and fundamental analysis. Look how long I can keep scrolling for. Okay? All I'm trying to say is, if people really want to put some effort and take some initiative, there's access to all of this at your fingertips. I'm still scrolling. 4 webinars a row. You have live trading streams. These are 3-hour streams when I used to stream London. Fully just talking about the markets the whole time. Not wasting any time. You know what I mean? You have individual analysis. I'm still going. Everybody. Still scrolling. There we go. 2 years ago. Alright? So if you really want to be and take some initiative, if you really want to put effort in, if you're complaining about people charging so much, what other marketer, what other mentor service out there that relates to the markets, technicals or fundamentals, has this much content for free? Not just live streams, fundamental webinars, technical webinars, educational webinars, course setups. For people who wonder why I'm so knowledgeable with the markets, why I'm so confident in my trading, why I'm so finding success years later now, look at how much work I've put in. This is just YouTube videos that I've uploaded for free. You guys want to see how many webinars I've done in the private channel? 980 webinars that I've done in the private channel. Each of these is a folder containing a webinar for the private channel. Like an intraday market update here that's 20 minutes long, right? Or our New York scalping session that we do every single day. 900 webinars. I'm just trying to show you that every single day, even at this point I'm at now, I'm still putting in work. I'm still putting in more work right now than some of you retards who are just starting out. And I found my groove. I found my edge. I know what I'm looking for and what I'm doing. Yes, I made a business out of it with the Capital Hungry private channel, but I'm just trying to motivate people and inspire people to actually put in that time and effort. 900 webinars. CH, quick pre-London update.
What's going on, everybody?
Right? Anywhere here you can click. Educational webinar on consistency. Anywhere you can click here. Another New York session recording. The private channel has access to 900 webinars total. Okay? So For everybody here who thinks you might be working hard, maybe you're not working as hard as you think. All of those webinars are analysis, breakdowns, risk management, psychology, fundamentals, lower time frame, higher time frame. Exactly. Yeah, we have the new 4-hour candle coming up here. There's a lot of people in the Capital Hungry private channel that pass their funding following Capital Hungry concepts. And there's a lot of people who use prop firm accounts. Yeah. Yeah, these types of sessions we do every single day in the private channel. There's 13 webinars a week in the private channel. Weekly recap, weekly psychology webinar, daily market updates and trade ideas, daily scalping sessions every single day. Unless something's going on in my life and I have to miss it. You know what I mean? But yeah. Oh shit. Anyways, everybody, I've been at it for an hour and a half now. I personally gotta go. So we didn't get to execute anything on gold. We just started to range here. GJ, we had some short-lived sell scalps. GU played out very nice with them sell scalps as well. Okay? Make sure you guys re-watch this webinar after it's saved. Tons of educational content shared. Psychology, fundamentals, news, technicals, breakdowns of market structure, and more. Make sure you re-watch this. I'll see all of you next time. Don't forget to check out all the YouTube content. I just uploaded a mini documentary yesterday. 30-minute mini visual documentary yesterday. Check that out. I'll see all of you next time. Have a great day. Take care.